Charles Hugh Smith's site of Two Minds blog. Well, this particular one is charleshughsmith.blogspot.com site, but he does have the of2minds.com site as well. Is the greatest bull market ever finally ending? And you probably saw my last video about China. Market's down 30% since January. Even the Dow Jones, you look at ours, when it peaked in January, fell off pretty good, then came back up, it's falling off again. The key here is the gains generated by owning U.S. denominated assets as the USD appreciates, he says. Is the greatest bull market ever finally ending? One straightforward approach is to follow the money, i.e. global capital flows. Assets that attract positive global capital flows will continue rising if demand for the assets exceeds supply, and assets that are being liquidated as capital flees the asset class, i.e. negative capital flows, will decline in price. Global capital flows are difficult to track for a number of reasons. A significant percentage of global mobile capital is held in secretive offshore tax havens and shadow banking, and tracking global corporate capital flows is not easy. Capital held in precious metals may not be reported, and assets such as enterprises, Enterprise Joe yet? No, not yet, just enterprises, and collectible art may be grossly undervalued for tax purposes. Toss in shadow holding companies, LLCs with obscure trails of ownership, etc. A definitive account of global capital flows is ultimately a guesstimate. Despite the limitations of tracking global wealth, Credit Suisse Research Institutes, their CSRI as they call it, issued Global Wealth Report 2017, gives us some clues about where capital is flowing in and where it's leaving for safer, higher yield climes, maybe he meant climate. Climes, C-L-I-M-E-S, okay. The first step in measuring global capital flows is to note that conventional capital is denominated in currencies which fluctuate in relative value. Of the roughly $300 trillion in global assets, Credit Suisse pegs the total in 2017 at $280 trillion, but other estimates say it's well above $300 trillion. About $8 trillion or so in precious metals, and a tiny sliver is in cryptocurrencies. He says Bitcoin's total market capitalization is currently around $112 billion, and Ethereum's is around $21 billion. Signal noise in the 300 trillion sloshing around the world seeking safety, low/zero taxes, capital gains, and high yields. So foreign exchange matters. Say a money manager moves $1 billion out of U.S. treasuries, denominated in the U.S. dollar, into bonds, paying a hefty 15% in annual yield denominated in an emerging market currency. If that currency loses 20% of its value vis-a-vis the U.S. dollar annually, the capital loses 5% of its value/purchasing power despite the hefty yield. The trick is to arbitrage yields in currencies, so borrow in cheap currencies that are declining and buy higher yielding assets denominated in currencies that are rising in value. For example, if a manager moved $1 billion out of a bond paying 4% in a currency that subsequently lost 30% of its value versus the US dollar into a US high yield bond paying 6%, the manager picked up 30% gains in Forex and 2% in yield for a total of 32% gain. For a variety of reasons, yields are rising in the US and the USD is gaining value relative to other currencies. Combine higher yields, relatively predictable safety, and an appreciating currency, and the US has been attracting global capital. These charts from Credit Suisse reflect this capital flow into the US and out of other nations. The phenomenal expansion of wealth in China is put into a different perspective here. With 4 times the population of the US and an economy roughly comparable in size, China's wealth has registered only 20% of the gains accrued by the US. If global capital was buying empty fiat or empty flats in China, etc., and selling US-based assets, those numbers would be reversed. This suggests mobile capital is leaving China and other nations and moving into US-denominated assets. Now, does that mean winning? We're going to win so much. You're going to get tired of us winning. Is that what this is? China? Another big FU way from Trump to China? Hey, your own citizens or people with wealth want to get out of your system. They're coming back over here as far as parking their assets or their money into assets. Most of the gains in global wealth have accrued to the U.S. and to the top 1%. The wealthier the entity or individual, the greater the rewards and opportunities for moving wealth into tax havens and safe havens such as Switzerland and the U.S., which is a massive tax haven in its own right. Here's another snapshot of the global wealth pyramid, which I just tell you about it. Since the Pareto distribution applies to wealth and income, we can guesstimate that roughly 40% of all global wealth is held by the top 0.2% or so. The top 8%, which would be 350 million people, own 85% of all global wealth. Where is all this money coming from? Largely from debt, which has expanded by over $100 trillion since the year 2001. Corporations have poured earnings into stock buybacks at a torrid pace. The net result is a gargantuan inflation in assets while real economy wages and GDP have stagnated. As long as U.S. yields and the U.S. dollar are ticking higher while the U.S. economy continues expanding, opportunities for capital to earn relatively safe yields and capital gains, capital will continue to flow into U.S. assets, despite the nosebleed valuations of assets such as stocks and left/right coast housing. The key here is the gains generated by owning U.S.-denominated assets as the USD appreciates. A 3% yield in U.S. Treasuries isn't all that great, but add in the 10% annual Forex gains, and you're netting a very healthy 13% annual return in relatively safe and liquid assets. The greater the sum at risk, the more compelling these attributes become. If you need to protect $25 billion and you want a liquid market you can exit without crashing the bid and exposure to Forex capital gains, then USD-denominated bonds and stocks are an attractive option at this juncture. Empty flats in China with zero yield and the potential downside of yuan devaluation, well, not so much. In summary, follow the money. Smart money is mobile, opaque, and constantly on the move seeking safety, tax shelters, yield and capital gains. If mobile capital continues flowing into U.S. assets such that demand exceeds supply, the bull market will continue sloshing higher. Once supply exceeds demand and capital starts liquidating U.S. assets, the bull market will end, perhaps with a whimper, stagnation, or with a bang, a crash. Capital flows will dictate that outcome. So, is it possible? Throw this out there. Oh, here we go with the cryptos. Let's hear what Joe has to say. Is it possible that some of that money looking for safe havens may not trust the U.S. fully? May not trust any part of the system, the current system, and say, I think I'm going to put my money into cryptos. If only a sliver of that money sloshing around looking for a place to go, just a tiny, tiny, tiny sliver. Like you said, there's trillions, hundreds of trillions of dollars in the crypto market. Is he talked about gold was what, 8 trillion, like in total. Crypto market, a few hundred billion at this point, 210 billion or so. If any of that money comes in here, it won't take much to move this market up. And again, with all the great news we've heard this year, I think there's going to be plenty of people who end up doing that. Or they they diversify. I'll put some in U.S. assets, overseas people. I'll put some in U.S. assets, treasuries, whatever. Dollar's rising, I'll take that. And because I'm not a fool, I'm a smart person, they would tell themselves, I'm going to diversify a bit. Yeah, I got my precious metals or just investments in precious metals. And I'm going to throw some over at cryptos. Heard of recently Fidelity's going to this custodian. They're going to have the custodian and everything. They're going into cryptos. We're going to have the backed exchange coming up in November, although I saw a little headline, it might be postponed to December or something. You guys see that? Backed exchange? Not that it matters. It got postponed a little bit. No big deal. And again, everything's timing. Everything happens for a reason. If that thing got postponed, it got postponed for a reason. The club wasn't ready yet. Whatever it is, right? But people are going to diversify one way or the other. Nobody in their right mind would just say, I'm going to put all these assets over here into U.S. Treasuries. That's it. Done. No. You never put all your eggs in one basket. We have a new asset class, cryptocurrencies. I don't know if I should call it a class, but a new type of asset. It's been around for a while, but it has never really been considered an asset yet. I think that's changing. So some of this money around the world is coming to cryptos. Cryptos are going to be replacing antiquated systems anyways. People are going to start using these things, and before you know it, whether they wanted to or not, they're going to be using cryptos, whether they wanted to or not. Take care.